Snipers here, back for another update. Let's take a look at Quant over here and see exactly what Quant is doing. Now, as you can see over here, when we take a look at the historical chart, we are within our fifth wave to the upside. So over here we have what's called an ascending broadening wedge. Now, within an ascending broadening wedge, your fifth wave tends to be very explosive, which we will see, right? So this is your wave 1, your wave 2, your third, come down for your fourth wave, and now we're starting our fifth wave to the upside over here. Okay, when this fifth wave comes in, it would be wise to take profit, because whenever you have an ascending wedge or a broadening wedge after your fifth wave, the correction that comes after it won't look very pretty. Okay, now I'll get more into the targets and the fibs and a little bit more into the historical wave count in another video, but for now let's take a look at the current price action that we have at hand. When we had our third wave up here, we had an ABC correction down to the 78.6% fib. So this is your A wave, your B wave, and then your C wave, perfectly coming down to the 78.6% fib here. Okay, you see how we perfectly wicked to that 786, wicked to the 786. Then we had a 5-wave move up for your wave 1, rejecting off of the 50% fib. Okay, just a little bit shy of the 50%. And then this over here would be your wave 1, 2, 3, 4, and 5th wave. Okay, this is your, so we'll keep this as, and we'll put this as sub-micro over here. Okay, so remember, you have 5 waves within your A wave. Okay, then you have a 3-wave move up, and then another 5-wave move down for your C wave. Okay, this over here would be creating your wave 1. Then you come down for an ABC correction for your wave 2. Then you have a 3rd, 4th, and 5th all the way up there. Now, don't consider where I place this 3, 4, and 5 as targets. We're going to get more into the targets in another video or later in this video. I just want to show you what the wave counts look like. Okay, this is your wave 2. And then what you have over here is a Wyckoff reaccumulation schematic. So you have your selling climax over here. Okay, you have your automatic rally, your secondary test, your failed breakout, and then you have what's called a creek. Now within this creek, you have a bunch of retail investors thinking that every low this creates over here is a bottom. Now usually with the creek in Wyckoff reaccumulation, you have a move below psychological support, and in this case, psychological support was sitting right at $100 or 99 bucks. We have a lot of retail traders saying that if price closes below 99 bucks, I'm done. I'm selling my quant bag, because they've been waiting for over 228 days in a larger 366-day accumulation schematic. So you have a bunch of retail traders pulling their hair out within this creek phase over here, selling their bags below psychological support, which would be the perfect time for the composite operator to buy up all that fear. Okay, so this is your wave 2, and then we have an ABC correction within that. So this is your A wave, your B wave, and then your C wave right here. Okay. Now we're starting our impulsive wave 3 to the upside. We've already had our wave 1. Whenever you have your whenever you have your spring, you're going to have an initial advance, and if you didn't manage to get in here in the manipulation, don't enter in quant as this thing is going up. Wait for a throwback down to key support. What we see over here is a 5-wave move up for your wave 1, and then a throwback towards the 78.6% fib on the linear scale. If we go on the logarithmic scale, we see that we've hit the 702 and the 786 still remains as a target. Now remember, if we, so let's go to the daily time frame here. We see that this is your sub wave 1, wave 2, 3, you have an ABC for your wave 4, and then you have a very explosive wave 5 hitting your 1.618. Okay, you see how we perfectly came up to that 1.618, had no closure above it. Okay, so this would be your 5 subwaves of your wave 1. Okay, this over here would be your wave 1 of 3 of your larger third wave to the upside. Okay, now what we see over here, let's go on the 2-hour time frame and let's map out this correction. What we see over here is our wave 1, our wave 2, our third wave, fourth, and fifth. Then you have an ABC correction up to formulate your B wave, and then another 5-wave move down. So this is your wave 1, wave 2, 3, 4, and then a truncation of the 5th wave. And then what we see over here is we see a range forming. Okay. Okay, so we take out liquidity on both ends of the range. We take out your sell side liquidity. We also take out your buy side liquidity. We see a move back down to the 88.6% fib. Okay, you see how we perfectly came back down to this 88.6% fib. And now this is just a expansion algo. Okay. Whenever you take out liquidity on both ends of the range, you come for a throwback to key support, and then you have trend continuation or trend expansion above the top of the range. So we have these levels over here. Okay, sitting at 114 and 112.7. Now remember, we are currently holding the 786-702 region. Okay, right. Sorry, we're holding the 61.8% fib. If we go below 103.2 or 102.7, then it's likely this over here was an A, B, C correction. Now we're having a 5-wave move down for your 5th wave of your C wave. And then so this over here would be your spring. So going below this psychological support over here would be your spring. Then we're going to have a move up for your initial advance, a throwback, and then a move up to take out these two levels over here, and eventually start our massive wave 3 of 3 to the upside. So remember one thing. If these fib levels hold, we should have expansion towards the top of the range and above. However, if these fib levels do not hold, then it's likely this is your wave 4 and we're bound to have a wave 5 like that towards the 78.6% fib at $95-96. Okay, but this is how the algorithm works. So what you have over here is you have your selling climax. So you have your move down, your move back up. This over here would be your preliminary supply, a move back down for your selling climax. Everyone sells their bag here out of fear. You have your automatic rally, your secondary test, your failed breakout, right? Your move back down to the bottom of the range, you kind of sweep this low over here, which causes a short squeeze to the top of the range, taking out this high. Then you come down for a throwback, okay, to key support. And the expansion algo tells us that as long as this support holds, we should make our way to these highs to take out the liquidity resting above it. Okay. However, if this support doesn't hold, then it's likely we should have a spring below this level over here, right? And then go off. Okay, so there's two scenarios, right? I'm showing each and every one. So I hope you guys enjoyed the Quant video. There's absolutely nothing to worry about if you hold Quant. It's a great investment. Remember, if you lose this level, we come down to 94, 95, 94, 96, 94 region. Find a bottom here, likely form divergence, and then make our way towards 114 and above. Okay? But I hope you guys enjoyed the Quant video. If you have any questions, just let me know. Peace out and take it easy. See you in the next one.